Today we're doing a complete breakdown of earnings per share, full concept plus interview questions, IAS 33, ASC 260, Indian Accounting Standard 33. We'll cover the scope, core principles, measurement, journal entries, and real interview questions. Whether you're studying International Financial Reporting Standards, Indian Accounting Standard, or ASC, prepping for a Big Four interview, or working in finance, this is everything you need to know. In this slide, we cover an important concept in this standard. Let us go through the key points carefully. Ever wondered why earnings per share is a big deal? Here, it's all about creating a level playing field. Investors need a reliable way to judge financial performance across different companies. This standard delivers just that. Public companies, this one's for you. Whether you're on Wall Street or elsewhere, this standard ensures your earnings are reported uniformly. It's crucial for companies juggling various capital structures and effective for specific annual periods. Let's crack the EPS model. It's about showing profit per share. Basic EPS is simple, net income divided by shares. But don't forget diluted EPS, which includes potential shares. It's a deeper dive into profitability per share. In this slide, we cover an important concept in this standard. Let us go through the key points carefully. In this slide, we cover an important concept in this standard. Let us go through the key points carefully. In this slide, we cover an important concept in this standard. Let us go through the key points carefully. In this slide, we cover an important concept in this standard. Let us go through the key points carefully. In this slide, we cover an important concept in this standard. Let us go through the key points carefully. Ready to master earnings per share? Dive into the essentials, dissect the process, and grasp the nuances. From net income to share calculations, let's unpack these concepts into practical, digestible steps. Your understanding of EPS is about to level up. First, get a grip on net income and preferred dividends, two essentials every finance pro must know. Let's break down these foundational steps to set the stage for accurate EPS calculations. Precision here is key. Calculating shares and applying formulas is where the magic happens. These steps transform raw data into actionable insights. Let's decode how to compute weighted shares and apply the formula accurately. Now for a practical example. Watch how these steps come alive in a real-world scenario. Understanding theory is one thing, but seeing it applied? That's where true comprehension begins. Understanding basic and diluted EPS differentiates pros from novices. Basic focuses on actual shares, diluted considers potential conversions. Analyzing both provides a holistic view of earnings. Ready to tackle interview questions with confidence? In this slide, we cover an important concept in this standard. Let us go through the key points carefully. Here, earnings per share recognition relies on the reporting period end. Calculate using net income for common shareholders, ensuring both basic and diluted figures are determined by weighted shares. Align everything with your financial statement date. Now, keep EPS up to date with any capital shifts, like stock splits. If convertible securities shift, remeasure diluted EPS. Consistency is key, but reassess if big changes hit your assumptions. Let's look at presentation. EPS shines prominently on the income statement. Report both basic and diluted figures, separating them from continuing operations. Spotlight any unusual items impacting these numbers. Key disclosures include your EPS calculation method and any share changes. Explain rights or convertibles affecting diluted EPS. Include qualitative insights about non-recurring items swaying your EPS results. Diving deep into how different frameworks treat earnings per share. Ready to explore IAS 33, ASC 260, and Indian Accounting Standard 33? Recognition differences can impact how earnings per share are calculated across standards. Let's see how International Financial Reporting Standards, Indian Accounting Standard, and ASC handle this crucial aspect. Measurement differences are key in EPS. Here, International Financial Reporting Standards and Indian Accounting Standard align closely, while ASC introduces unique industry-specific guidance. Let's break it down further. Disclosure is where things get interesting. International financial reporting standards and Indian accounting standard demand comprehensive disclosure, while ASC focuses on complex capital structures. Intrigued? Let's dive in. Transitioning between frameworks can be tricky. International financial reporting standards and Indian accounting standard offer retrospective application, while ASC provides practical expedience. Understanding these can ease transitions. In this slide, we cover earnings per share, journal entries, an important concept in this standard. Let us go through the key points carefully. Meridian Corporation boosts its equity base by issuing common stock. With 100,000 new shares, the basic earnings per share calculation will reflect this increased share count. Each issuance affects EPS, as it changes the average number of shares outstanding. Meridian Corporation executes a strategic buyback of 20,000 shares, reducing outstanding shares. This action uses $240,000 of cash, affecting EPS by decreasing the denominator in the calculation, potentially increasing the EPS if earnings remain constant or grow. With a 10% stock dividend, Meridian Corporation increases its shares by 8,000, impacting future EPS. The entry reduces retained earnings, and the new shares must be included in the weighted average, affecting both basic and diluted EPS calculations. Meridian Corporation's bondholders convert bonds into 5,000 common shares. This transaction impacts diluted EPS by adding more shares to the total. The conversion reduces liabilities while increasing equity, demonstrating an essential aspect of EPS calculations under IAS 33. Issuing options doesn't require a journal entry upon grant. Still, they play a crucial role in diluted EPS. If options are exercised, the share count increases, potentially lowering EPS unless offset by corresponding earnings growth. Upon exercising options, Meridian Corporation records $30,000 cash for 2,000 new shares. This exercise affects diluted EPS by increasing shares outstanding. EPS must account for these additional shares, showing the dynamic nature of EPS calculations. Year-end net income of $500,000 closes into retained earnings. The EPS calculation reflects all share activities, issuances, repurchases, dividends, conversions, and exercises. This comprehensive approach ensures accurate EPS under IAS 33, ASC 260, Indian Accounting Standard 33. In this slide, we cover an important concept in this standard. Basic EPS represents net income attributable to common shareholders divided by the weighted average number of common shares outstanding. It's vital for assessing profitability per share. Investors and analysts use it to compare profitability between companies and across periods. Diluted EPS adjusts basic EPS for potential dilution from convertible securities, options, and warrants. Calculate by adding potential shares to the weighted average shares and adjusting net income for convertible securities. IAS 33 and ASC 260 both require EPS disclosure but have differences. IAS 33 focuses more on explicit guidance for complex scenarios, while ASC 260 emphasizes detailed rules for diluted EPS. Both aim for comparable EPS across entities. Stock splits increase the number of shares, affecting the weighted average calculation. The trap lies in not adjusting past periods for splits, leading to inconsistent EPS. Ensure historical shares are adjusted for accurate reporting. Preferred dividends reduce net income available to common shareholders. Ignoring them inflates EPS, misleading stakeholders. Always subtract preferred dividends from net income in the EPS formula to reflect true earnings. EPS is not applicable for private companies or entities without publicly traded shares. Their lack of market-traded equity makes EPS meaningless for comparison. Focus on other performance metrics like net profit margin for such entities. Let's zoom into the basics. EPS gauges profit per share, a key profitability measure. Covers entities with public shares, capturing both basic and diluted measures. Always show EPS for overall and continuing operations. Discontinued operations need separate disclosure. Dive into EPS models. Basic EPS pulls net income after preferred dividends. Diluted EPS, factor in convertibles. Don't forget weighted averages, adjustments for splits, and ignore antedilutive items. Adjust prior periods for comparability. Key interview points. Adjust EPS for splits. Avoid anti-dilutive traps. International financial reporting standards versus ASC nuances matter. EPS presentation goes beyond notes. Clear disclosure of calculations is critical. Know when contingent shares count. Performance-based inclusions. That's your complete guide to this accounting standard. If this video helped you, please like and share. It genuinely helps us keep creating content like this. Drop your standard requests in the comments. Subscribe to Candy Mentor for more accounting and finance videos. We'll see you in the next one.